has delivered yet another talk, this one through the Ivy Business School, the Ben Graham Center for Value Investing. It's a shorter talk. It's only a half hour. There's no Q&A. It's just him delivering a monologue. So I want to share my highlights from this talk. A lot of the things that Pabrai talks about in here, he's mentioned numerous times over the last, say, 6 months. But there's some new stuff too. So let's dive into this one. So Pabrai says, and he said this multiple times, 2020 was an unexpectedly amazing year of growth and learning for him. Most people would just want to forget 2020 and move on with their lives. For Pabrai, it was a really unique learning experience. So what did he learn? There's a book that's coming out in 6 days. This was as of when this was recorded on April 14th. So April 20th, this book was released. I've been listening to it on Audible. It's called Richer, Wiser, Happier by William Green. Pabrai is highlighted in the first chapter. The first chapter is all about Pabrai. But Pabrai, he says about that, some yo-yo, you can skip the first chapter. He's self-deprecating in the best of ways. But chapter 6 was really transformational for Pabrai. And this is the chapter on Nicholas Sleep of Nomad Investment Partnership. Okay. And it actually inspired me to jump ahead to chapter 6. I listened to it today. It is fantastic. So highly recommend, guys. If you're looking for something to read, I would even say drop what you're reading right now. Pick up this book, Richer, Wiser, Happier. And if you do nothing else, listen to chapter 6 or read chapter 6. It really inspired Pabrai to shift his whole approach to investing after 25 years. Okay. Right. It caused Pabrai to hit the reset button in his approach to investing. So for the first 2.5 decades, 1994, basically to 2019, 2020, Pabrai was singularly focused on finding 50-cent dollar bills. Okay. Bonus if it was a 40-cent dollar bill or a 30-cent dollar bill. But he was looking for cheap investment opportunities where he could buy the business for half off, and the market would recognize that it was too cheap and price it in alignment with its value within 2 or 3 years. Okay. The beautiful thing about that, if you get a double in 3 years, that's a 26% annual return. Okay. Over 30 years, that's 1,000x if you can do that, if you can get that double every 3 years. If you can do it even faster in 2 years, that's a 35% annual rate of return. So, the numbers work. The numbers make a lot of sense. But the challenges with the buying 50-cent dollar bills, every couple of years, you have to keep finding new ideas. Okay. Because say you have a portfolio of 10 different companies that are 50-cent dollar bills. You've got to find 10 new ideas every 2 or 3 years as these investments turn over. So it's not tax efficient, first of all. It's also a lot of work. Okay. So Pabrai, he was ripe for a new approach. And the approach that Nick Sleep really inspired in him is finding these 100 baggers that you can hold for decades and let those businesses compound your wealth for you rather than, giving some money to this company, pulling it out, moving it around constantly. Just let the business compound your wealth for you. So that's really where he's at now. The lessons came from the Nomad Partnership letters, which are available online. I have the first handful of them printed out. I still need to really devote some time to that. In conjunction with the William Green book, Richer, Wiser, Happier. So those are two fantastic sources of investment wisdom for you to dive into. And then the other one he mentions, this is a very old book. It's deceiving. It says January 2015. It must be a reprint. This book came out in the early 1970s, okay? Like 50 years ago. 100 to 1 in the stock market. A distinguished security analyst tells how to make more of your investment opportunities. And the author is Thomas Phelps. Now, I've heard a lot about this book because 100 Baggers by Chris Meyer references this book a lot. This was kind of the inspiration for Chris Meyer to write effectively the sequel to this book. Looking for 100 Baggers between the early 70s and whenever the book was published, 2014 or something like that. So it's kind of the next 5 decades of 100 Baggers. But Pabrai had amazing things to say about this book, 100 to 1 in the stock market. So many of the lessons in here are still applicable today. So this is definitely at the top of my list of things to read in addition to the Nomad letters, and I'm still working through Richer, Wiser, Happier. So check those out. I'm sure I'll be making videos about that material in the near future. So Pabrai says, you will find what you are singularly focused on finding. Okay? Makes a lot of sense. That's one of his 10 commandments. Thou shalt be singularly focused like Arjuna. Okay? So again, for the first 2.5 decades, he was focused on finding 50-cent dollar bills, and he was finding them, right? His fund did well with that approach. Now he's singularly focused on 100 baggers, which really, it's a different set of tools to find 100 baggers than it is to find 50-cent dollar bills. It's a very different approach. So I'm very curious what he's going to find in the next year, 2 years, 3 years, as he, pivots, as he turns the wheel on this aircraft carrier that is Pabrai funds, to shift from owning businesses that are 50-cent dollar bills into owning these 100 baggers. And it's fantastic. We get to see what he's buying each quarter through 13Fs, through Ticker Terminal, which kind of covers his positions outside of the U.S. So I am very excited that the Pabrai is making this pivot and that we get to watch. We get to watch what he's doing and try to reverse engineer when he enters these new positions. I did want to pull up Ticker real quick, just to show those of you who aren't familiar with it how powerful it is. And it's a free thing. It's in beta right now. I can send you an invite if you're interested. But we can go here to track investing gurus. Pabrai is here under value. They're going to have to move him. He's not a value guy anymore, right? He's not the 50-cent dollar bill guy. He's probably over here from 2020 forward in the growth at a reasonable price column. So we're going to click on Pabrai. And we can kind of get a sense for, he's mentioned there's a few positions in his portfolio that he sees as potential 100 baggers. And if you ask me, Shinnikin is one that he's said he thinks very highly of in recent talks. He refers to this Japanese company. This is the only Japanese company that he owns, at least that's been found by Ticker. And you can see he's been increasing the position pretty recently. March 15th, he increased it 22.5%, Shinnikin. Rysas, R-Y-S-A-S, is the company he talks about in Turkey. He actually talked about it somewhat extensively in this 30-minute talk that he gave at the Ben Graham center for value investing. So check it out to hear what he has to say about RACES. And you can see he's been adding a lot this year as well, 53% to that. And Edelweiss Financial Services out of India. He's also added quite a bit recently. If I had to guess, I think he's a bit more bullish on NICE Holdings out of South Korea than he is on Edelweiss. But don't ask me to submit any kind of report with my thesis on that. These first two, these are his two U.S. holdings, right? Micron and Seritage Growth Properties. He's mentioned, I don't think he thinks that either of these are long-term compounders, okay? Seritage, he was able to buy at like $7 per share. Buffett bought at like mid $30 per share. So and he made the analogy, if there's a movie theater, right? You're in this movie theater and it's on fire, right? You can start to smell smoke. The game of investing, how it works as an analogy with this movie theater, you can leave the movie theater, but you have to find someone else to take your seat before you leave the movie theater. And so, there were a lot of seats being offered very cheaply with Seritage Growth Properties. And that's really what inspired Pabrai to take a seat at this movie. So that's kind of an overview of his positions. He mentions that the Amazons, the Apples, the Googles of the world, obviously they're great businesses, but you can't pay any price. You can't pay any market cap for a business and expect to get that 10-bagger, 100-bagger performance. And he thinks Amazon, Apple, Google, they're just too big. They're too big for him to think that he has any realistic chance of getting a 100-bagger from here out of those companies. So that's why he's not buying those, because he's singularly focused on 100-baggers. He needs to find the Amazons, the Apples, the Googles much earlier in their evolution, like what Nick Sleep did with Amazon. I think it might have been 2008 or so. Whenever Amazon started Amazon Prime, they started charging that annual membership to get 2-day shipping. That's when Nick Sleep really saw what they were doing, saw that they were kind of imitating Costco in a way, and got really bullish on Amazon. So clearly we're past that for Amazon, but there's always more great companies coming along. We just have to get good at identifying which ones they are. He talks about how RACES is not a portfolio position. He does not see it as a portfolio position. Clearly, it's here in his portfolio, right? It's right here. But he's looking at it as Pabrai is a junior owner to the family that runs RACES, okay? He's looking at this business as if he's an owner. It's not a piece of paper. It's not a stock ticker to be traded, okay? And I think that's really important. That's something that Benjamin Graham talked about. Is it something that Benjamin Graham? Benjamin Graham talked about that. How when you take ownership in a business, treat it as being an owner of that business. And of course, Nick Sleep was big on talking about how Walmart. Sam Walton. Sam Walton, there was only basically a handful of people who owned Walmart from when it went public in, I think it was the early 1970s. And that was the Walton family. No public investor even owned it for more than 3 decades, okay? So it's such an edge for investors to have that mindset of, okay, I'm going to treat this stock ownership as I'm an owner in this business and I'm looking at the long term. That's such an edge in an environment, in a stock environment where people's timelines are getting shorter and shorter. So much impatience. The impatience speeds up as technology advances. We have access to our stock portfolios right on our smartphones. Whenever we want to look at them, we can sell stocks with the click of a button. It's not helping in terms of finding these long-term compounders and holding on to them. So for the few investors who can look at them that way and behaviorally master that skill set to hold for the long term, there's a greater and greater edge, in my opinion, in the market today versus the market decades ago. So I just want to drill that into my head. He wants the portfolio to be a museum of 100 baggers, okay, where his positions, haven't changed over decades. That's really what Pabrai is trying to achieve here, a museum of great businesses, which again is very different from where he's been in the past. And I really I'm going to end on this point. All you need is one. Okay, so Pabrai likes to make 10% bets with his funds. He manages around 500 million at the moment. I think it's a little bit higher, but let's say 500 million. So ideally, he wants to make $50 million bets. 10 bets, 50 million each. Okay. Now, if one of those $50 million bets becomes a 100 bagger, he now has a $5 billion fund. Okay. So the fund is 10 times larger than it is now. If only one of those hits, if only one of those becomes a 100 bagger, achieves, the highest aspirations that he has for these investments. So all he needs is one to hit. With Nick Sleep, it was Amazon. Amazon was really the one that dominated that fund over time. It grew to something like 70% of Nomad fund, 70%, one position. Okay. So, it seems not unreasonable to me that we can make 10 bets. If we are singularly focused on finding 100 baggers, we can make 10 bets, and one of them, all we need is one to become a 100 bagger, and it transforms the portfolio. Okay. You've got a 10x in the portfolio. That's not considering, I'm sure there will be some other winners in there as well. But it's a compelling framework for investing, at least for me, as I think about the next decade or two of my own investment endeavor here. So anyway, guys, just wanted to share that summary, those highlights from Pabrai's talk just a week and a half ago at the Ben Graham Center for Value Investing Conference. Let me know what your big takeaways are in the comments. Let's keep the conversation going here. And with that, thank you all for watching. I will see you in the next video. Take care.